So far, this is where we were a little while back. Oil did the run up on this story that BP is going to pause all oil tanker transits through the Red Sea. Now, obviously, the Red Sea is a pretty big area for shipping, and BP being a very, very major oil producer. So if they're not shipping through there, others may well follow. This can create a major restriction in supply of oil. Now, it doesn't mean that these things are necessarily the oil is not going to be supplied, but what it means is that a different shipping route has to be taken, which can be more costly, add to insurance costs, actual shipping costs of going a longer distance to get around the Red Sea, and that's where the restriction comes in. So oil jumps, market rallies, we've had a recent pullback, and then we get to where we are just now, and we're actually on the breakout in oil. You see the pace has picked up somewhat in oil just at the moment. We're having this very, very swift run up. And so one of the trades that I was going to talk about is this potential bad high in oil and the possibility that if indeed we can break that high, then oil has the scope to continue onwards to the upside. First up to around $73, which is this little zone here. 73 being these lows, these highs, and then 73.15 the lows just beyond that, and that's where we're sticking just at the moment. So we've got that first little quick flow up. Now it's a question of, right, where do we go from here? Does the market consolidate and go for another leg, or is this merely a break that stops out the people who are short in here and creates a bit of a spike, not dissimilar to these couple of spikes here? So the look that I'd be thinking is, well, with a couple of rejections, you've got the breakout now. Can we now go and look for a move all the way through this zone? 74.40 really being the bigger target for the rest of the day, or perhaps over the next couple of days. That, of course, is contingent on the market holding above 73, 73.15, that being the area that really matters. If we can do that, then yes, you've got the continuation. But we do now have a breakout in oil. This has at least given us a bit more in terms of directional context and a point now where you kind of see where we can go next. And that's one of the things I'm always sort of looking at. You can see the scope of where we can go, 74.40, but it's about, well, what happens from here that enables that to be a move that genuinely could be traded. So the direction seems set. It's a case of where do we go from here? What do we do from here to give us that next leg of the move? Right. S&P has also given us a breakout, this one coming on Wednesday in particular on the Fed, and then consolidation Thursday, Friday. I actually think the consolidation Thursday, Friday is rather useful, as much as it may have seemed a bit boring post the surge that came on the Fed. What it does is it shifts value up, as you can see. Value shifts higher. This now enables a market to continue onwards. What we got on Friday was a inside day. So nice consolidated inside day. Again, something you kind of look for, because what's going to be helpful about that today, being as we have also had a rather muted overnight range, 69 to 83, we've essentially stayed well within the upper part of yesterday's cash session. So you're now looking at this as a potential breakout. If you can break the inside day, which would also be an opportunity then to go and break the pennant on the hourly, this then sets you up for a continuation higher. So it seems the tone is set. On the back of that surge on the Fed, the market was quite happy to stay up here. So it's happy to shift value higher. So the question now is, can it actually put the next leg in? And that's about getting above 85. To the downside, it is a pennant. So yes, you do have potential on the downside. In particular, if you can get through this VPOC, which also coincides with previous cash value low, previous highs on that Fed day, then you could see a bit of downside. Break the VPOC, break these levels here, value from the last 2 days and the Fed high, you could see a drop. But with the structure of this market, with the way the S&P is trading at the moment, this could well be a situation where it's a quick drop into this 46 to 36 zone, the box I've got down here, and we bounce again, the buy the dip trade. And really, until you get through that box, it's hard to see why you won't get that type of scenario. People looking for this buy in towards the end of the year. If you do get below 36, then yes, you've got the scope for a quicker move down. 47.09, these highs before the Fed breakout would be the area that I'd be targeting then. So there is scope to the downside, but we've got quite a lot of work to do in moving down before you can really believe in that further scope towards the downside.